Hey everyone, welcome back to Corporate Decoder. Today we are cracking open a proxy statement, which might sound boring, but trust me, there are usually interesting tidbits hidden inside, like who gets paid what, and how well the company is being run. We will be looking at Mohawk Industries, a giant in the flooring business. Think carpets, tiles, wood floors, the whole shebang. We're diving into their latest proxy statement, which is like an instruction manual for their annual shareholder meeting. Basically, this document tells shareholders what's on the agenda, who's up for election to the board, how much executives are making, and other important stuff. It's our job to decode it all and figure out what it means for the company and its investors. Okay, let's jump into some numbers. In 2024, Mohawk Industries had worldwide sales of about $10.8 billion. That's a huge number. They also made $1.4 billion in adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA. That's a measure of how profitable they are from their core operations. Their free cash flow, which is the money they have left over after paying for everything, was around $680 million. They seem to be doing okay. Now, one of the main things in this proxy statement is electing directors. Think of directors as the people who oversee the company and make big decisions. They will vote for a bunch of people to decide who gets to be on the board. It's good to know who these people are and what they bring to the table. The document highlights their experience in areas like global business, mergers and acquisitions, finance, and even sustainability. Basically, they want to show that they have a well-rounded board with the right skills to guide the company. The board has a few important committees, like the audit committee. They make sure the company's finances are in order and that they are protected from fraud. Then there's the compensation committee, and they decide how much the executives get paid. Finally, there's the nominating and corporate governance committee, who help find new people for the board and keep an eye on how the company is run. There are rules in place about how directors are elected. They need to get a majority of the votes, and if they don't, they're expected to offer to resign. It's a way to make sure the directors are accountable to the shareholders. Companies are talking more and more about sustainability these days, and Mohawk is no exception. They have goals around people, planet, and performance, and are trying to reduce their environmental impact and be more socially responsible. They want you to know that they care about more than just making money. Time for some more numbers, this time about the company that checks their books. KPMG, an accounting firm, was paid $10.8 million to do all sorts of things for Mohawk in 2024. Most of that was for the actual audit, but they also got paid for other services like tax advice. Everyone wants to know how much the top executives are making. The proxy statement has a whole section on this with tables showing salaries, bonuses, stock awards, and everything else. The goal was to reward executives for doing a good job and to keep them motivated to make the company successful. Here's where it gets interesting. The table shows how much the top folks at Mohawk made in 2024. The Chief Executive Officer, Jeffrey Lorberbaum, made about $4.8 million in 2024. It is also important to note that that same year, the company lost about $439 million of net income. This is a big red flag that indicates that the executives may not deserve the compensation. Other high-ranking folks, such as W. Christopher Wellborn and James Brunk, made about $4.1 million and $2.2 million, about $39 million of net income. This is a big red flag that indicates that the executives may not deserve the compensation. Other high-ranking folks such as W. Christopher Wellborn and James Brunk made about $4.1 million and $2.2 million respectively. Again, at face value, it's hard to justify numbers like that in a loss year. As of the end of 2024, the company has 517,751 stocks that may be issued upon exercise of outstanding option. The report shows that the ratio of CEO compensation to median employee compensation is 108:1, which means that the CEO is earning 100 and added employee. Looking at a non-GAAP reconciliation, which essentially backs out one-time events. While they show a loss to the bank, they actually did well. Their adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization as a percent of sales is 13.2%. They seem to be turning the ship around. Their debt, however, is at a pretty risky level. Hopefully sales can pick up. Finally, it always matters who owns the company. Jeffrey Lorberbaum, the CEO, owns a big chunk of the stock, about 16.1%. This means he has a lot of say in how the company is run. Alright, so what's the big picture here? Mohawk Industries is a huge company that's facing some challenges, but they're working on turning things around. They have a strong market position, but they need to keep innovating and managing their costs to stay competitive. The management team is doing an okay job, but the pay seems a bit extreme for some when the company isn't profiting. Ultimately, their debt will come to bite if there are more down years. So what do you think about Mohawk Industries? Do you think they're on the right track? Leave a comment below and don't forget to like and subscribe for more Corporate Decoder.